Thank you very much, Kathy. Well, South Africa's financial services watchdog, the Financial Sector Conduct Authority, has imposed a 50 million rand fine on US-based research firm Viceroy Research. This is over a report by Viceroy in 2018, which claimed that Capitec Bank had misled the public about the state of its finances. According to the report, which was titled "A Wolf in Sheep's Clothing," basically Viceroy said the bank is a loan shark. Joining us now is FSCA Commissioner Unathi Kamlana to tell us more about the significance of this fine. Good evening, sir. Let's start with the FSCA, which has been very, very busy of late. Let's talk about the history of the story going back to the claims made by Viceroy in 2018.
Yes, so quite right. Good evening, Xolani. So this relates to their report that they published in January 2018, and they were making some allegations and statements which, in terms of our investigation, were found to be false and incorrect. And we do provide some information, the statement that we issued today, about what those statements were. And I think in a material way, what we also found was that even when the facts were put to Viceroy, they refused to correct their statements and to publish full and frank corrections. As such, that was the incentive and what informed us taking this action of this administrative penalty against them of 50 million rand. It is a path-breaking and a precedent-setting fine in this area. And hopefully we are sending a strong message that those that have views and publish comments on securities in our listed and regulated market should at least make sure that those are truthful and they're in full compliance with the Financial Markets Act in this case.
You followed this matter right to the U.S., even enlisting the help of the Securities Exchange Commission in the U.S. Let's talk about some of the findings that you actually made against them, including the fact that one of the directors or their partners may have actually had a hand in making money out of this through shorting the Capitec Bank stock.
Yes, I think the main business model here was that they had a profit-sharing agreement with one of their clients who had taken a short position on the Capitec share, and as such, they were going to make more money the further the Capitec share was falling. And this was, I think, the incentive that informed them also refusing to change their statements and assumptions, even when facts were put to them around the veracity or lack thereof of the assumptions that they were making. And this is one of the things that inform, I think, the size of the fine that we are imposing on Viceroy Research and its partners. The fine is imposed on them jointly and severally.
Explain to us what you mean in your statement when you say that the report and its claims, which have been found to be false, could have led to the South African financial system actually collapsing because it is a listed company, we are talking about, which is a Capitec Bank.
So although, of course, our focus here in general is around ensuring market integrity and making sure that those who have comments and opinions on listed securities in a regulated market are held to account. The point is that in addition, in this instance, the entity that was targeted, or the securities that were targeted, are that of a bank, Capitec Bank, which happens to be a systemically important financial institution in South Africa. And we made this point earlier when we were talking to the media to say that could have triggered a run on the bank, because banking is a business of trust. With the kind of statements that were made, it was very possible for depositors to lose confidence in Capitec. And had that materialized, you could have easily had systemic instability in our financial system with implications, negative implications for depositors, the banking sector, the economy as a whole, and even the fiscus. So that's the point that we're making in terms of what we perceive as the potential impact of this kind of behavior by Viceroy Research.
You've touched on this just a little bit, but in your investigation, did Viceroy Research divulge why, with so many laws internationally and here at home, such as the Financial Regulation Act, which prevents false claims against listed companies, that this US-based firm ignored all these laws and released this report in spite of evidence being presented before it?
Well, apart from what I was explaining earlier about what their incentive structure was, given that they had a profit-sharing agreement with the client who had taken a short position on the share, they refused when we provided them the opportunity that we are required by the law to provide to them to make representations in terms of our draft report. They refused to make representations. And I mean, that is also their right. It's their legal right to refuse to do so. But we think that it is because they actually also understand the seriousness of the breach that we are communicating here in terms of the Financial Markets Act.
What we know so far is that in January 2018, when those claims were made, the Capitec stock was impacted and it actually declined by 23%. Anything else that actually was implications for shareholders and clients of Capitec as a whole?
So in addition to that, I mean, I guess the point that we're also making in our statement is that in addition to the Capitec stock losing close to a quarter of its value, you also potentially dissuaded potential investors into the share because of the value destruction and uncertainty and volatility that they saw during that time. Of course, the share did recover. Of course, part of that was because the Prudential Authority and the South African Reserve Bank did provide information which I think restored confidence in the Capitec business model and therefore assisted the restoration of value in terms of that share.
Before I let you go, Capitec has grown into the biggest bank, by market value on the South African market, and it just goes to show how big and how hard they've worked. But as you've said, this bodes well for regulators like yourselves and the sector itself of financial regulation, that you have managed to do this, and it sends the correct message out there.
Yes, absolutely. We want to send the strong message that there are consequences to breaching the laws that pertain to this regulated market, and the Financial Sector Conduct Authority will not hesitate to take action against those who are found wanting in terms of compliance with our laws.
Unathi Kamlana, the Commissioner at the Financial Sector Conduct Authority, thank you very much for your time on this important development in South Africans' financial market regulations. Well,